Okay, so with that, we come to the final plenary session for the day. So this is something that we bring all of our attention and focus into, especially with the context that's being discussed, the Vision 2025 Digital Payments, Security and Privacy Agenda for Contactless, Interoperable, Contextual, Resilient, and Global Vision. For this, we have a power-packed panel of leaders. With the esteemed speakers for the session joining us, can we have Nand Kumar Sarvade, moderator, who's advisor board member, iCosmos. Yes, joining him, we have, I know Praveena is on her way. I'm not sure if she's gotten here yet. We have Praveena Rai, COO, NPCI, who will be joining us, but I think Mumbai traffic is standing in the way of getting us to get her on stage. Nitendra Rajput, Senior Vice President, AI Garage, MasterCard. And Vinay Godse, CEO, DSCI, for this conversation. So once Praveena comes, she will join the panel. It's over to you, gentlemen. Thank you so much. Take it away.
Good evening, everyone. Last session of the day. Hopefully, it will be interesting enough for all of you. I think the topic is of great interest to all of us, payments. And I remember during the COVID days, there was a meme floating around saying that the happiest message of the month is always that your salary account has been credited, right? So, and so much excitement in India. Nobody tires of talking about UPI and the kind of magic which is there, and what more we can look forward to. So we have a great panel today. Praveena hopefully should be able to join us, but we have a gentleman from MasterCard. Vinayak is there with his bird's eye view. And I wanted to start off with the Vision 2025 term, right? So it comes from the RBI document which was published on payments vision. And it talks about various objectives which are there on what more needs to be done. Obviously, it's a very well-written document. It talks about achievements of the previous vision document and then sets out a vision which is not very far. 2025 is hardly 2 years away. And there are very interesting parameters which have been mentioned in the vision document. They relate to, of course, the objectives of financial inclusion. They talk about interoperability of payment mechanisms. So one way of making payments connecting to the other way. 24/7 availability of payments, real-time payments, and the whole lot of objectives which are there, which will obviously go into the design process and yield a great customer experience. Recently, there was a study published which talked about obviously the huge growth of UPI. And those of you who follow the payment sector would recall the work of the Committee on Deepening of Digital Payments under Mr. Nilekani. And it talked of very aspirational numbers comparing with other countries, how many per capita transactions are there, digital transactions are there, and how we can reach there. I have not of late seen any analysis comparing with those benchmarks, but I'm sure we have covered a fair bit of distance there. But there was also a very interesting piece of statistics which came about recently, which said that the power law applies in UPI payments, right? So 4% of the users make maybe 50% of the transactions. And it is not really financial inclusion that we are looking at, but customer convenience and the adoption, and obviously the adoption on the acquiring side, merchants, small vendors, everybody getting very comfortable with QR codes and what you have. So it's a huge mind shift which has happened, and we need to really look at a scenario which will build on this. Obviously, financial inclusion looks at payments as the first way in which people get on the digital path, right? The way people are making digital payments provides a rich source of data, then to understand their profile, their eligibility for taking loans, micro loans, personal loans, loans for consumption, loans for investment. And everybody is looking at this particular way of how financial inclusion can be expanded. Of course, cash is still, I don't know whether to call it the king or a prince or whatever, but thanks to the recent announcement on withdrawal of 2,000 rupee notes, everybody is looking at cash as something with which is there is still a competing factor for digital payments, right? And if you look at the ATM withdrawal data, it still shows growth. It's not showing that it's going down in any manner. So we are in a very exciting space. I think more and more use cases are coming up. The great example of FASTag as a way to make toll payments and increasingly payment for parking charges and fuel charges, and the way fleet management can happen. So many use cases coming up, and the challenge, as we see, is going to the tier 2, tier 3 and beyond, and then see how digital payments will work. You would have heard about Manipur disturbances and the suspension of internet, which happened there, mobile internet. And this is a common occurrence. As we know, India is the leading country when it comes to scheduled shutdown of internet because of law enforcement reasons and so on. And we have this challenge of enabling offline mechanisms to ensure that the normal life is not disrupted. So very exciting space. RBI has actually put out some very measurable metrics in terms of what all will be achieved at the end of the 2025 deadline, which is there. And I will refer to my notes when I kind of read out those, because those tell us, and some of us, most of us will have our own enterprise targets to dovetail into this. But one of the targets mentioned is volume of check-based payments to be less than 0.25% of the retail transactions. So this is something which we know anecdotally or otherwise happening already. Checks are only sent as scanned images, as cancelled checks, for ensuring that the account number is properly captured. But otherwise, nobody is writing checks. More than 3x number in number of digital payment transactions, which I'm sure we are already on the way to that. UPI to register average annualized growth of 50% and IMPS at 20%. Increase of payment transaction turnover vis-a-vis GDP to 8, which is something which it depends on the overall economic growth, but also how payments are scaling up. Increase in debit card transactions at point of sale by 20%. Debit card usage to surpass credit cards in terms of value. Increase in PPI transactions by 150%. Card acceptance infrastructure to increase to 250 lakh. This is interesting because I was talking to somebody who works in the POS infrastructure space, and very interesting development there. Increase of registered customer base for mobile-based transactions by 50% CAGR, and reduction in cash in circulation as a percentage of GDP. So very clear, measurable goals, and I'm sure the entire ecosystem will be working on this. So with this background, and I can see Praveena walking in, so welcome to the discussion, Praveena. We're just about getting started. And at this point of time, after having talked about payment vision by RBI, I would like to then call upon the panelists to share their perspective, individual perspective, organizational perspective, and then we'll come to questions which I have for each of you, and then we'll have some time for the audience questions. So can we start with you?
Yeah, sure. And thanks a lot for setting the context. You really reminded us of the fact when our salaries get credited and we get that SMS. But I'm also reminded of the fact that a lot of times when we used to actually, and I'm revealing kind of my age here, that when I had joined my organization, of course the salary would get credited in the bank, but a lot of allowances were used to be paid in cash. And that was what made me more happy, because you can actually see the cash in some sense. we've moved a long way from that point to here. And again, I'm kind of revealing my age, but when I was a child in our village, the way to buy ice cream was actually the ice cream wala would come out on the road, and I would take some wheat from my nana's place, and in response of getting the ice cream, I'm going to give like 1 kg or whatever of wheat to him. So I'm from those times that the barter system really existed, okay? And the way you would buy things at a monthly heart, buy vegetables and so on, is that you will carry that like 5 to 10 kgs of wheat, and you buy like some tomatoes, you buy all the grocery items and so on, and you keep giving the wheat back there and so on. The same village, now when I go to, you can do everything without actually having any cash and definitely no wheat in your hand. So things have progressed significantly over the past few years in India and elsewhere. Today morning when I was leaving the house, my wife saw that I only had a 100 rupee note, and I had to take a flight from Delhi, which means taking a cab, then coming through a flight, and then being here and having some food and so on and so forth. That 100 rupee note is still in there in my wallet, and I don't think it's going to be utilized, because no matter where you go, digital payments are completely there. And that's a significant change that has happened over a period of time, so maybe we do not realize, but perhaps it has been one of the most transformational aspect in the Indian economic ecosystem. And as most of us are from a payments ecosystem where we are helping create this ecosystem, secure this ecosystem and so on, I think the larger purpose is for us to improve the economy. And we do not want businesses to worry about doing transactions, going to the bank, standing in queues and so on. The businesses are going to be much more efficient if they focus on what they do, produce goods, sell, serve customers and so on. And while we, most of us who are in the room, preserve that ecosystem so that things move much fast. The faster things move through the payment ecosystem, the more efficient the businesses are going to be. And therefore, as Mr. Nandakumar was pointing about the RBI 2025 vision, I think the most passionate thing about that is that they want India to be a payments powerhouse, a digital payments powerhouse. But I think what will happen is that it will translate us into an economic powerhouse, because businesses are going to use this payments powerhouse and significantly improve the efficiency. So beyond payments, I think it's a much, much bigger play where we are all helping in terms of moving the economy significantly fast compared to the rest of the world. So that's perhaps the most exciting thing about this vision.
Thank you. That was very wonderful perspective about linking payments growth to the economic growth. Pravina, can I call upon you to, because you are in a vantage position of making it happen and then seeing the vision of where it is going to go. So if you could share your perspective about the payment vision 2025.
Hey, thank you very much, and wonderful to be here. So the payment vision is, something that really emanated more than 10 years back, when I think RBI decided to establish an organization that will start running the payment systems of the country, and then also start driving what needs to be envisaged as the digital payment systems of the future. And if we go back 10 years, and I think he was also alluding to the way the world used to work, I think we had a very simple world with, check truncation, and even check truncation was not there, right? Check clearing, our ATM switching network being in place, and of course, NEFT and RTGS. And from there, we've evolved a long way, and the vision paper put out by the Reserve Bank, actually, if somebody has not read it, please do. It's a very comprehensive, well thought through and well-written document, which not only outlines what really has been the highlights of the last few years, but puts forward a journey for what's coming. Of course, it's not set in stone, because it'll evolve and things will work as they need to. But some of the key elements on customer always being at the center of the system, safety and security being highly important elements, interoperability being key, the cost to the ecosystem, continuously, dropping. All these are core principles that, one tends to see in this vision document. So when we look at, for example, I like to see the context of how, India is a market, despite, I think, a lot of debate that keeps happening, where we have the second factor authentication, is one of the few markets with second factor authentication. On one hand, we can think of it as a source of friction. But actually, if you think of a market where we are digitizing so fast and bringing in people who may be, not that savvy into the digital ecosystem with significant benefits to them, this also gives that one layer of protection. And, in general, we see that in the numbers, in the outcomes of really the way we are in a better position to manage that security layer because of that element. For example, when we look at, the cards world also, transactions, when they happen overseas in markets where the PIN is not required, you tend to see a bit more vulnerability as compared to otherwise. So I think these are some of the guiding elements. By 25, I think I'm sure we would have moved many notches from where we are now. Continuously looking at how the journey has to progress, but also bringing in an international element to it, right? So for example, looking at how some of the products we have in India can, become more connected with the corridors overseas. How do we really lift and shift some of the good work that we've done here into markets that will want them? And again, here it's not just the technology, it's not just the rules and guidelines, but it's also the way the safety and security elements are really deeply built into the design itself, that starts becoming important. I think so. These would be some of the good points that we can look at.
Thanks for the insider perspective, so to say. I think the point of internationalization is everybody is very keenly looking at how that will happen. And all of us have either friends who want to send money to India with less cost to it, or just use our UPI handle, go make payments in other countries. But I'm sure soon we'll be looking at those scenarios. I wanted to ask Vinayak, with his outside-in perspective on especially the way payment technologies will move. And we are looking at, we had a discussion earlier about security by design, security where the user judgment is not every time taxed, wearables, national security aspects of payment, how payment systems are designed. So whatever you think is connected to this.
Yeah. So if I see I'll little bit dwell into history as well, but this history is largely, I think, around 12, 13, right? So that time, there was something which happened in mobile technology. NFC came and there is security element came, which Apple brought, and then the SCA that Google brought, right? Which laid down that early strategy of JAM as a way to do digitization, right? Especially payment industries. I remember those initial paper of my tea as we have been part of those interaction and discussion. And that paper laid down a JAM strategy for digitization of the payment in the industry, right? And then we had seen mobile as central to a lot of technology evolution, not only here in India, but other parts of the globe as well. And the good part which we probably distinct from other market is this intervention that we brought in terms of architecture as this interface, right? Which enable as Aadhaar, but more importantly, this UPI interface, what it really did is like it could because see, there is always a problem of working with the legacy system and working with the innovative ecosystem, right? So this interface could able to connect with all the banks on one hand. Other hand, it could provide a lot of those possibilities for many small plus mid and big organization, right? So making the payment ecosystem more participatory in nature and democratized in nature, where somebody like Google is also helping us to initiate the transaction. Somebody like Paytm already had been doing this, and they are also using and leveraging this basically. So this interface architecture intervention and interface-led approach is really democratize the way the payment ecosystem is evolving in this country basically, providing a lot of opportunities, possibilities, and people build a lot of innovation on top of it basically. And then there are institutional arrangement that we had in terms of NPCI and all those policy that we evolve in a way that that now that become as a kind of a India story for digitization of the transaction ecosystem, right? So now this is being seen as global because we have been being part of a lot of those G20 discussion, and the way we have been talking to the global geographies, especially the story is definitely catching a lot of attention, and people are trying to see how can we leverage this approach. So this is our approach to digitize the transaction, but overall digitize the economy, because there are definitely US-led approach and Europe, which is more end-user driven, right-driven, and there is a China-based way of doing digitization. But we try to prove to the world that this architectural intervention with the ecosystem that you build together, you can make it more participatory, more democratized, and at the same time, you can achieve that scale. The scale, tremendous scale that we talk about in terms of the UPN. And so this is definitely one of the key character of the kind of digitization we achieve. So this is one part. And in the process, we know that the digitization is also unbundling, right? So it's like the unbundling is a term usually we discuss in the context of telecommunication, but it's also happening in financial transaction processing. So the supply chain of financial transaction processing is so unbundled. So there are a lot of innovation that is possible with this approach basically, right? And then also the cost of the transaction is quite low, and because of that we are doing very small value transactions in villages, in other parts in transaction processing ecosystem basically. And then we created a lot of those ecosystem, allied ecosystem, for example, this NCTC framework, because of that entire transport payment ecosystem, you all like that, and FASTag that we try to bring together. And there is a way to take this in various different kind of a direction basically, right? So we see from the overall national ecosystem perspective that the entire this payment industry and this confidence of doing this way is the confidence that we are now trying to emulate in other areas as well, like health sector, we are trying to do agro sector, and we are trying to do many other sectors basically. In fact, and that's the story that we have been trying to create as overall, can you emulate this one basically? So this experiment is really helping us in that direction basically. So in all of this ecosystem now, what we see, especially in this 2020, 50, 25 perspective is basically how this is going to be in the next ecosystem. So for example, Aadhaar talk about Aadhaar 2.0, which talks about so much technology-led approach to do a lot of possible things. So for example, now recently they allowed the private sector organization to do authentication, right? Other authentication. It will create another possibilities for next level of digitization we'll see in the country basically. So is the NPCI is also working for the next possibilities basically. So this volume and scale and then the way it will extend. Tomorrow we are doing this embedded finance, right? So there are a lot of things. Until now we talked about Internet of Things, but probably there will be finance of things. Anything which is digital can be actually instrument for you to initiate the transaction basically, right? So and then you leverage a lot of those possibilities, and the kind of evaluation we see in hardware side for that matter, the speed that we see. Now quantum computing is coming, how that will lend its capabilities to a transaction ecosystem. So it will be very interesting to see how things will go from now actually. So one is the kind of parameters or KPIs that you talk about, but I'm trying to really translate those parameters in technologically, if I talk about this embedded finance as an ecosystem, where exactly it will go basically. If I have to leverage hardware capability for payment system, where it will go basically. If I have to leverage, for example, quantum, so some mechanisms basically, where it will go basically. And then in all that ecosystem, as a security, privacy, profession, this is a gathering of those people, finding a ways and finding those thinking, how can you make this entire ecosystem more secure basically, is the area that we would like to explore from the data perspective.
So I think I will come back to with some questions about the future of technology in particular. But I wanted to ask Nitendra, given your background on working on data science and AI, how do you see, we are already seeing the negative applications of generative AI with spoofed voice calls, etc. But from a protection point of view, from a security point of view, how do you see AI will help in especially securing payments?
Yeah, thanks a lot for asking that question. It's kind of close to my heart. I think we all talk about digital payments, and there's this word also called as digital footprint. And what we are doing by making transactions in a digital manner is that we are leaving the footprint of our transactions, right? So as an example, it could be thought of as the fact that someone is walking in a desert and that person is actually leaving the footprint in that desert. The more people do those transactions in a digital manner, we can log them and then we can analyze them later and so on. An analogy of that is that as soon as I leave my footprint in sand, someone will be able to figure out what's the size of my foot. Someone will be smarter to figure out, okay, how much the sand gets deeper, therefore maybe they'll be able to figure out my weight. Someone will be able to figure out, okay, from one footprint here to the next footprint here is this much distance, so that's my stride length. So they'll be able to figure out my stride length, through which they can figure out my age, perhaps. This is what is happening in the digital payments ecosystem, right? As and when we are making payments which can be logged, people can actually measure these things and figure out about what this customer is. That can give insights into the fact that next time when there is another footprint, they'll be able to figure out, no boss, this doesn't belong to this human because his footprint is of some size. This doesn't belong to him because he never takes such long strides. This doesn't belong to him because his path would have never crossed this particular merchant and so on. And that's where I think we are getting more data using all these different footprints. AI is becoming much more smarter by being able to figure out all these nuances of difference between one foot size versus the other, one stride length versus the other, and how it grows over a period of time. People can see that strides initially are very small of children, then they grow when people are young, and then as they go old, it's become smaller and so on. Similarly, our spend patterns also change based on where we are in the stages of life. Now, what it can do in the payments ecosystem is to secure us by making sure that we have enough guardrails so that AI can then figure out, okay, this belongs to this person or not. It can actually help us create a good it is already helping us in terms of creating a good profile of our customers so that we can service the way they should be serviced in a much more personalized manner, as opposed to pushing everything specific to and like painting the whole picture with a broader brush. So those are possibilities, but it is being catalyzed by a lot of things. One is the increasing number of such footprints that we see. Second is the quality of AI, which is able to handle all these footprints and understand those things. Third is the ability of organizations to come together. Lot of times, I am going to see a footprint, only 10 footprints of a person, some other enterprise will see another 10 footprints, some other enterprise will see their, I don't know, handprints. I'm just taking these examples, but we understand these are specific nuances that each of us have as organizations of our own customers. If they all get together, which is what the fraudsters can do, they collaborate better than perhaps organizations. But if we all get together, which is where organizations like the governments and the RBI can play a role, if we all get together, then we can provide a much more enhanced ecosystem of understanding our customers and share those insights and make that system much more powerful from a data science perspective. So I think a lot has already happened. A lot of us are already using AI. We saw the presentations earlier. Everyone is actually using that in their systems, but the future is definitely much more beyond what we've seen so far, for sure.
Thanks a lot. That was going to be my next question about data sources, but you already covered that data has to be pooled by participants, otherwise the visibility is going to be limited for everybody. Praveen, I wanted to ask you about the internationalization pillar, which is there in the vision document. How, as Indians either traveling abroad or working abroad, will benefit from what the vision is going to translate into actual services? Would you like to share something?
Yeah. So I think I'll first maybe have some continuity to the very good points that was made. Because the role that AI can play in really looking at addressing this whole security and risk management infrastructure without compromising experience significantly is really amazing. And I don't think we are anywhere near even scratching the surface of that. And I can share with you, for example, what we're doing on UPI. Because, of course, there are standard risk rules, and, there is the concept of a UPI PIN for authentication. It's a standard two-factor authentication mechanism. But we realize that, the more rules you put on it, it's like really going after risk with a blunt instrument, that instrument needs to get sharper and sharper. And over the last 2 years, some good headway using AI engines by which the data that is available, that's flowing through the ecosystem, along with the data that is provided on suspect transactions, right? And he rightly pointed the challenge that nobody wants to share this information. So the biggest task of a project like this is actually getting the ecosystem to open up and come to the table for the larger and common good. But with that, I think models have started evolving in such a way that there is a risk score. If it's more than X, then, a transaction is declined. If it's between X and Y, it kind of, goes to the bank. Bank can decide on profile of customer and say, no, this customer profile is okay. Or if they feel there's potential for suspect, they can actually decline the transaction. And this is giving, pretty good efficacy. And will get better and better, as really the data flow happens. So it's as always, a self-fulfilling cycle. Once there's a starting point, then it kind of feeds on itself. So I think we are sort of in the midst of that. So looking forward to really upping the ante on that piece. So I thought I'll just add to what he said on the AI side. So coming back to your question on international, so given the fact that we've been fortunate, I think timing has been good. The system design has stacked up. The whole ecosystem has come together very collaboratively to create the outcomes on UPI we have today. And there is a lot more work to be done in the country. The idea really is to say, how do we take this overseas and how will it make a difference to a UPI user? So there are 3 streams here. So one is to take a user who's traveling to any of the markets where typically an Indian tourist or a business person will go to and be able to use UPI in that market, right? So that's number one. The second is really the remittance flows. So which means that inward remittance into India. India is the number 1 market globally, nearly $100 billion of inward remittance. And there is a healthy outward remittance, right? People paying for various purposes. So how do we really eliminate the friction in these 2 legs while retaining all the good experience, the instant nature, and the safety parameters on UPI? This gets a bit more challenging because there are compliances, international compliances to follow. There are also our regulations on for cross-border transactions to understand the purpose of transaction. Recently also there have been certain policies that have been debated on this front. So complying with all of that, but interestingly, complying with all of that is only a small percentage of friction. At least where the friction need not be there. Those transactions can happen without a problem, delivering this 15, 20, 25-second sort of experience that one is used to in UPI. The third leg is, of course, to say, look, UPI exists, we've got a good model running, how can we take it, and will there be markets that would like to deploy it, would like to actually take a system like this live for their own purpose, domestic purpose. And there, of course, increasingly in the current geopolitical environment we are in, country sovereignty plays a very important role. So, one needs to give that comfort to ensure that there is interest in a open-minded manner to really look at that. I think that's going to be some time away, but clearly number 1 and 2 will be what makes a big difference in terms of users in India.
Vinayak, I wanted to pose you some provocative point. Yeah. One of the points in the vision document talks about attempting regulation of big tech who are in payment. And it's a very interesting problem, because as we know, payment banking regulation is very domestic, but now we have big techs very much into this, and that's a conundrum which the regulators are trying to grapple with. So that's one aspect of it. The other aspect is now we have a privacy protection law coming in, and a lot of the data around payments is very valuable, and currently there is a certain way it is being utilized, but there may be some constraints around it going forward. So just wanted to pick your brain on these couple of points.
Yeah, so thanks for asking that question. So digitization till the time of 2012-13 was, or up to that as well to a large extent, was a bank putting a kind of a RFP tender and working with some kind of a provider to digitize its operation, getting core banking application, retail. So this is one way of digitizing, right? And suddenly we realized that still it's very difficult to achieve that goal of inclusion, goal of scale, the volume basically, right? And as I talked about around 2012-13, so why big tech became important in payment ecosystem, payment game basically, right? So one is the mobile, right? And as I talk about mobile brought something which could help you to do the transaction or execute the transaction basically, right? So that's one of the key things which happened in 12-13, where you can really secure the exchange of message for the payment. It's very important part, and mobile brought that basically. On top of that, then they have platform. So for example, a lot of good experience-driven kind of platform which is reached to millions of people. And why we see most of the banks, and I get surprised, I used to get surprised if you go to airport, they'll say our bank is on WhatsApp, right? So why? Because this platform has that many people on this platform basically, and you want to leverage this platform to reach out to the maximum number of people, right? And that's why the role of big tech, because of experience, because of the technology that they brought in mobile, and because of the scale of people which is on their platform basically, right? And we started seeing relevance of them. On top of them, they brought these more security like biometrics to authenticate you on mobile devices. And now most of the applications, mobile applications are use biometric. For example, I use my bank mobile application and I use my local biometrics to get access to that basically, right? My security application is also give access to that. So this capability is big tech's capability basically, right? And that's why their role, until now they were like social media application helping you to exchange, but because of the scale, because of this capability, and because of this innovation around NFC, innovation around security element and SC that I talked about, so their role become very important for all of these reasons basically. And then on top of that, the experience they provide, on top of that, ubiquity means you can carry them wherever you want to go, and that's why you do transaction basically, right? So all that made it very important to see and work with these big tech companies to do the transaction basically. But then there is a problem of monopoly, there's a problem of privacy, there's a problem of data which started picking in, and probably other countries were struggling, and we found answer with this interface which I talked about basically, where it became central in that ecosystem, and now all of them work with that interface basically, right? And they bring all of this on that interface basically. In a way, digital payment infrastructure that we talk about is an answer to two challenges. One is the siloed, one organization, one service provider, one kind of a digitization, and other side there's a big technology ecosystem, big tech ecosystem, which is creating these kind of challenges. We brought this infrastructure which could work with the bank and their digitization plan on one hand, and on the other hand, it could also work with this big tech. So and then it's also probably in a way, it's also addresses some of the concern associated with our infrastructure, at the end of it is a public infrastructure basically. So in a way, and then on top of that, definitely now all the privacy legislation which talks about, which tries to, in a way, take on some of those kind of challenges of privacy, definitely. And we need to see the entire, why we gone back from the very stringent GDPR++ law to a kind of principle-driven, simple data protection regulation. So this reality that we learned in last 3-4 years of time in terms of the role of digitization and digital economy. So that reality kicked in terms of really simplifying compliance requirement for the privacy. And that's why we see the current formulation much simplified, much principle-based as compared to what it used to in 2 years back basically, and the 155 page of a regulation brought down to 26 page of regulation.
Right. I have a question which I think any of the panelists can, more than one can also answer. How do you see CBDC, which is a hot topic again, I'm sure many of the audience will have some questions, fitting into the payment vision as an alternative to retail payments, as programmable money, as something which kind of also disrupts banking in many ways. So it's a sensitive topic, so I don't expect everybody to answer, but whoever wants to answer can answer it. Maybe I can start.
Briefly talk, may not be very nuanced answer, but I talked about this unbundling of transaction processing, right? There's so many players, so many layers involved, right? And there is also financial intermediation that happens, and the entire financial industry is based on that, right? So some ideas of CBDC challenges those unbundling happen and those intermediation happens basically, and could create challenge for this entire ecosystem and all this possibility, job creation we had in this ecosystem basically. That's definitely one danger of that. At the same time, it brings a lot of possibilities to the table, which I don't want to discuss more on possibility because that is known. There is also risk of privacy that people talk about with respect to that, because every transactions will be known, centrally known somewhere basically. So we see some geography are very active in that and aggressive on that basically. So that's another important thing basically. So I'm sorry, I'm just putting together challenges of that. There are definitely discussion happening in terms of the possibilities, but these are some thought in terms of CBDs.
I had a question to Nitendra on, particularly on card payments. Like everybody talks of digital payments, UPI of course is the big one, but the card payments, credit card payments have also risen very healthily, I would say. And I think the preference among the users is for larger payments, card payments are preferred. So how do you see this trend in the Indian context, how that particular channel will continue to grow? And in terms of security, does it have any advantages, disadvantages vis-a-vis the digital one?
Sure. I think you kind of answered the question itself by saying that card payments are used a lot for larger payments. And what about the security? So it looks like the security there is higher, and that's why you can do larger volume, large transaction amount payments on the card network. That is where, because it's been there, and it's kind of secure, and that's why people feel more comfortable doing large transaction amounts in the card payments. But coming back to your first point, I think with respect to the growth of cards in the entire ecosystem, I believe the way to look at it is that the entire pie of the digital payments ecosystem has been increasing. whether it has been through cards, whether it has been through debit cards, whether it has been through the new P2P transaction systems or online payments and so on, the overall pie has been increasing, and as a result of that, each of these individual components have also been increasing. And perhaps that's what's going to continue, and the trends that we see today are also kind of putting us in that direction even in India. So very recently, like as an example, MasterCard launched like a prepaid card which can be used in remote areas, even in an offline situation. So those kind of innovations, and there are many stakeholders in the industry doing all these kinds of innovations, which are helping penetrate the digital payments, including cards, across the entire spectrum. And I mean, while we've made leaps and bounds, but looking at the strata of societies within India, and if you go from like cities like Mumbai, where we are in, to like 70 kilometers from down here, there is a significant change, and which is actually a huge opportunity for digital payments. And I see a lot of innovation will need to happen even in the cards network for them to penetrate this market, but that is only going to increase for sure along with the other partners, I feel.
Pravina, one big development in last couple of quarters has been the whole rollout of tokenization across the payment networks. How do you see, I mean, this has been really something which I don't think any other country has attempted at this scale. And despite some of the extension of the deadlines, it got done finally. So how do you think this will help people develop more trust, and which way it will grow?
Yeah, so I think kudos to the entire industry, right, from merchants to aggregators, banks, and all the networks. I think the tokenization rollout was seamless. It was a big change because all the cards that are stored on file with merchants had to be purged, which means customers who were used to making, let's say, an e-commerce transaction without having to put in their card details will suddenly realize they can't do that anymore. And obviously for a customer there's always that point of what's this? Till yesterday I could do it and today I can't. So having that ability to quickly create a journey where that token is getting created with the customer's consent was key, and that's where I think this coming together, and thankfully RBI gave those extensions required to pull the pieces together. So we are in a far more secure environment where card number is now no longer being transmitted. It's a bit, again, I think we've gone more stringent than any other market. So you need one token per device, per merchant. So even if there is a vulnerable token, the risk is like limited to that transaction, and the transaction is anyway over. So I think we've taken a tough sort of a space. It's difficult to get there. It's a lot of hard work by the ecosystem, but the protection for the customer and the experience for the customer, is really good. A part B to this, of course, while your question looks at card tokenization, is really the definition of a UPI ID, the way we know it, which is a virtual address of an underlying account. So in UPI, by design, again, no account information travels, right? So it's only the virtual address, which is meaningless. It's like anything, right? ABC. So that travels, and no one can really do anything with that information. So any card that is now linked to UPI, which is a very easy process without any infrastructure work or any heavy lifting, automatically becomes highly secure in the manner that only the VPA travels. So really, we have the UPI trails, and the experience that offers comes without the cost and heavy lifting to the entire ecosystem. But when we look at the more traditional cards mechanism, then, this is where we are. And I think we've got now two very good parallel ecosystems, both highly secure, that are now running.
Right. So I'm mindful of the time that we have utilized already, but I wanted to leave some time for the audience to question. And I'm sure some of you have very pointed questions to ask. So if the mics can be circulated, we could start with the gentleman here. Please stand up and introduce yourself, and then be brief in your question.
Yeah, good evening.
You got the mic, yeah. Yeah, go ahead.
Yeah, since the appropriate panel is here and all are from FINSEC, would like to highlight whether is India focusing on voice-enabled payment, which is integrated with UPI, so that, as you mentioned, only 4% are covering 50%. So it's basically reasons are maybe low internet or no internet or low literacy. So if we can tackle these two using voice-enabled, maybe this can achieve furthermore.
Do you have a question also?
No, that's
Okay.
Yeah,
You want to comment?
I can just give you a quick answer. So I think on UPI, there is a UPI 123 Pay, that was launched recently. Again, a new system always has, its own gestation period. But today, 123 Pay can be used for services like gas booking, mobile recharge. So typically, again, being used in geographies and, perhaps by people where the connectivity is poor, or more importantly, there's a nice integration. You call for a gas booking and you finish the call, and on the call itself, you're able to finish your payment transaction leg also. And if you look at booking, house gas, it's sort of every household in the country needs it, right? So I think some of those nice, very interesting use cases are getting addressed. And I think over time, we'll see more of those play out.
Can you stand up and introduce yourself?
So myself, Ganesh Saini. For example, like NPCI has done a very good job in terms of being a backbone for UPI MPS payments. So still in terms of the fraud or the fraud risk management, still the banks individually is looking after for their frauds. So what do you think, so if someone takes leads like NPCI or someone else who looks as a centralized fraud risk management, what's the future for that, and what do you think, what will be the challenges for that?
I think you may want to take it up. Okay.
Yeah, I mean, you're right. Not only fraud, but in general, I think cybersecurity is a significant challenge as we all move towards the digital ecosystem. And if you know, like, right, in this union budget, government has actually put 600 crore rupees separately for cybersecurity infrastructure. And there's this national cybersecurity strategy also that is coming up. So it is not just a problem for the banks for sure. So it looks like the ecosystem is looking at it. And there are external companies, organization, institutes who have a lot of strength in this space of doing fraud-based analysis and identifying, as Praveen was saying, that every transaction that goes through, let's say in our network, we identify and provide a score to the banks that this looks suspicious or not. And maybe because, so the bank have their own scores as well, but a network like MasterCard would see cards from all different banks, and therefore it has much more information. So which bank can add to it? So I won't say that it is just the banks which are going to look into it, and there are other additional players in the ecosystem who are strengthening their frauds significantly, frauds detection mechanisms which will be passed on to the banks, and they should be able to use that.
Want to add, Vinayak?
Yeah, so see, why this happens in the context of the bank is because the relation is between customer and bank, right? So that's would be always true, but largely we are looking and reflecting on to maintain the trust on digital payment ecosystem. And although percentage-wise is much lower as compared to other geography, but still the volume is more in India, so that's why we need to take that effort. So there is certainly individual banks is trying at a aggregate level, I am sure UPI and many such institutions basically has been trying to work on this particular problem, but at national level as well, because managing fraud is, one is the effort that you took at a technology level in a bank, and the way you manage the relation and liabilities associated with that is one equation, but other side is at a national level, the effort that you put together. So there is a entire I4C, which is a cybercrime coordination center government of India set up, and we closely work with them, and law enforcement side addressing recourse for any fraud. So we are able to train people in forensic, but we still see a problem in terms of immediate support to the victim, basically, right? So that's still a big challenge that we see. We are doing a lot of awareness, but the volume and speed at which the transactions are happening, with the awareness is the only instrument, and efficacy of that is definitely getting challenged. So how do we support? And then another challenge in the fraud ecosystem is like many of the liability associated with the fraud, because there is a user action involved, and that's why most of the time the liability gets shifted on user. If you authorize the transaction, that's why you are liable. And sometimes then that creates a problem in terms of the trust on the user side, basically, and the issues with that. So can we create an ecosystem where cognitive burden of user with respect to security decision are reduced, so that system takes care of the challenges of the fraud, basically, right? So there's some engineering idea for that. How do you reduce the user's role in the transaction processing so that it will become more frictionless, but at the same time, at least for small transaction, basically, if a user role is making user responsible and making the banking and other payment ecosystem out of the liability equation, so that is creating a lot of challenges. So there are a lot of technology solution which can be thought about, and the frictionless transaction authentication, authorization model can be thought about. So that's one part, but worry is also law enforcement side, worry is also providing that support. If anything happens, how you quickly support the victim, there's still a lot of challenges in that, actually.
I think if you look at the classic fraud management framework, which is prevent, detect, respond. So respond is now getting together with I4C. But as always, we have to shift left and go to prevent. And what can be done using data science, I think, is the challenge. And you have to come together. No entity will do it by themselves. So any other, somewhere in the middle, can a mic be? Okay, that one.
Firstly, thank you so much for spending the time and giving valuable advice. My name's Krish, and I represent an IoT company that designs and develops these sound boxes. That has been the gold rush recently, right? But so we're involved in the software and hardware part, where we realize a lot of PSUs and fintechs that we supply to focus strongly on the software part due to the data protection laws. But what they don't realize and what they're willing to compromise upon is the hardware part of these devices as well, which they don't realize that makes the device susceptible and their data susceptible as well. So we've seen regulations, keep up on the software side, but what do you think can be done on the manufacturing and hardware side from the government point of view and from the board industry in general to make the companies realize that both parts are essential for the product to do well, but also for your data to be secure as well?
Vinayak?
Yeah, so this is, thanks for asking this question, and some of the discussion we are doing together about this embedded finance, where how the different things will be used to initiate transaction and sometimes execute transactions as well. Many things are still, overall expertise is also largely on a software security, but hardware security, a lot of encryption that you may build on a software algorithm, but you can break it at hardware level by using a lot of interesting technology which has come there, basically, right? And then a role of hardware, because of the heterogeneity of the devices that will probably initiate the transaction, is a very important part. There are some effort government of India is putting together. There are a lot of investments are going on hardware security specific. So we got some funding from MIT to set up a hardware security effort with IIT Kharagpur and IIT Madras. We are working towards looking at these kind of possibilities, and some of the payment providers in Bangalore. So we are working towards how do we take the discussion at hardware level, hardware security level, basically. So definitely more things to be done on that, and more capability skill needs to be developed in this particular area.
Thank you.
Right. So I think we are kind of run out of time. So I just wanted to wrap up the session. I think we had a very wide-ranging discussion about the payment vision with most of the topics covered, some of the sensitive ones included. I wanted to thank my esteemed panelists. Pravina had to battle a lot of traffic jam to reach here. And Nitin and Vinayak stepping in with their very well thought out perspectives. Thank you for your patience, for being at the fag end of the day and being patient with the session. So thank you very much, and back to the MC.
Thank you so much, panel. We have tokens of our appreciation being handed out to you. There you go, myriad perspectives, insights, anecdotes, data, RBI's payment vision for accelerating India's economic growth, unbundling the digital payment ecosystem, the role of AI on securing digital payments. That was the conversation. I think this panel deserves a round of applause. Let's thank them for their insights and inputs.